Hey, welcome back to the channel, and I've got a real special video for you today. Today I'm going to be talking about and showing you the 10 best ETF funds, exchange traded funds to buy right now. This is real exciting. So I'm going to be going over the 10 best ETFs that you should be looking at and most likely should be invested in right now. That's what we're going to be covering today. If you're brand new to my channel, if you haven't already done so, please consider subscribing to the channel and please hit that like button. It greatly helps my channel out and I would greatly appreciate it. My name's Austin and I bring you videos pretty much every single day with one objective and one goal, and that is to help you do more with your money through investing, through managing your personal finances better, all kinds of things. And I would love to see you be a subscriber to the channel and be part of my community. So with that said, let's get into it. What are the 10 best ETF funds, ETFs, that you should be in right now, that you should be buying? I own a couple of these myself. I'll mention the ones that I own and let's get started. So let's talk about the very first one. The one that you should be looking at and that you should be in is the SPDR S&P 500 fund. You just saw it come up below. And this is one of the best ones. I've got a few notes here, so if you see me looking down, that's what I'm doing, just to make sure I give you all the relevant information. It is one of the biggest and most popular funds on the planet. It is probably one of the largest ETF funds by many measures. It boasts around $330 billion, that's with a B, in total assets at present and trading nearly 80 million shares a day. The reason it's so popular, guys, is real simple. It is benchmarked to the S&P 500 index. That's really it. It is one of the single best ETF funds, probably number one on the list, and you should absolutely be in this fund, okay? Let me make sure there's not one that I've left out. Nope, that's the number one. Let's move on to number two. The second one that I want to show you and talk to you about is the Invesco QQQ ETF, okay? This one is really worth pointing out. While the S&P 500 added an impressive 16% last year, the NASDAQ 100 index really did about 45%. That's crazy. So the triple Q is linked to this high-flying alternative, okay? It's linked to the NASDAQ, right? And so this is one that, again, you should be in. I love this ETF fund. This is one of the best ones out there. It focuses on the top NASDAQ 100, and it's one that you should absolutely be looking at. If you're not currently in it, you definitely ought to consider it as one of your core ETF funds, and definitely one of the top ones in the top 10, okay, in the top 10 ETFs that are there, period. You should most likely be looking at this. By the way, darn it, I forgot to mention it earlier, I am not a stockbroker, and this video is for entertainment purposes only. Check out the disclaimer below, and check with a licensed stockbroker before you make any decisions. So with that said, let's continue moving on. What is the next ETF fund on our list? This would be the third one, and it is the Vanguard Information Technology ETF, okay? If you like technology investments, then this is the one for you. It is one of the best ETFs related to technology, and it's basically not benchmarked to a broad index of stocks, but rather to a list of companies that are only in the tech sector, okay? This is one that you might already look at if you like tech. I'm a big believer in tech. Tech is obviously a big part of our lives, will continue to be a big part of our lives, and this fund is specifically tied to that, okay? Let's see. The list of holdings is big at more than 340 total positions, and you won't find a single pharmaceutical company, by the way, mega bank or retailer as you would in the prior index fund. So what they've done is they're limiting this to only tech companies, which means there's a little bit more risk here in that you're limiting yourself to kind of one sector of the market. And I talk about this in all my videos. I think that when you're looking at ETFs or mutual funds or whatever, it's good to have a different mix. It's good absolutely to have a different mix of different types of funds that you need to be involved in. And this could be one that you might want to look at if you like tech, and because it's specifically tied to that. By the way, this particular fund delivered roughly 45% in returns last year, which is a huge amount, considering that the S&P 500 did on average, I think 13.6% last year. Okay, so that's pretty impressive returns with the Vanguard Information Technology ETF fund. So check that one out. That one ought to be definitely on your list. Okay, moving on. The Vanguard Growth ETF is another one on our list, another Vanguard fund. So if you don't really want to go all in on a specific sector like the previous fund, but you still want to focus on companies with higher growth potential in 2021 and beyond, then this fund may be for you. It's one of the best ETFs to buy related to, basically it takes a slightly more sophisticated approach than say broad-based funds like the SPY fund or the Triple Q index. It layers on screening methodologies and zeroing in on companies that appear to be growing their profits. That's what this particular fund does. I want to say this again. This particular fund basically has screening methodologies in the fund that zero in on companies that appear to be growing their profits or revenue faster than their peers. Okay, so that's pretty impressive from a fund standpoint, and this is one that you ought to be looking at again, and that was the Vanguard Growth ETF. Okay, so you might ought to take a look at that one. That's one of our top ones. Okay, moving on. If you're interested in small cap funds, then this ETF is for you. This is the Schwab U.S. Small Cap ETF. Okay, so again, this is a little bit different approach to tapping into growth potential, and so without relying on a small list of stocks in a specific sector. Okay, this particular fund offers a massive list. By the way, again, I have a few notes just to make sure I get this right for you. 1,800 stocks. 1,800 stocks. 1,800 stocks make up this fund, many of which you won't recognize because it excludes the big corporations that dominate other index funds. Okay, so instead, top holdings at companies in this fund are like such as LED light manufacturer Cree, cancer fighting startup NovoCure. The ETF comes with an ultra low annual expense ratio of basically $4 for every $10,000 invested. So that's an extremely low expense ratio, which is something you ought to always consider. And so again, what this one is it's a different approach, right? A lot of funds are, we've talked about SPY and Triple Q. Those are kind of broad-based index funds. We talked about one that's tied to large cap. This particular fund, though, is tied to small cap, and it's looking for kind of growth within small cap companies, smaller companies. It has 1,800 stocks in it. So this again, it might be something you might think about. It's a little bit different of approach. Okay, so give that some thought on this particular one. Okay, so here's another interesting one for what this, continuing to kind of round out our top 10 here. And this is a lot here to say, okay? This is the iShares MSCI USA Min Vol Factor ETF. Say that really quick. Okay, I've got all that written up on the screen there for you. iShares MSCI USA Min Vol Factor. Okay, so this particular fund, I want to make sure I get this right, so I'm going to read this almost verbatim. Look, if you're less optimistic about the stock market in 2021 and maybe 2022, and you instead want to take a more defensive approach, consider this ETF fund, okay? This ETF fund is benchmarked to a list of stocks compiled by MSCI, the company that compiled this fund, and it's an index provider similar to the S&P, but it focuses on minimum volatility stocks that go up and down less severely than their peers. So this is I would think of this, guys, as a risk minimization fund. That's what I would think about this, okay? It's designed to give you an edge over the typical index fund with holdings like Big Pharma, like Giant Merck, big Pharma like Merck, consumer staples like PepsiCo. And these are things this is one that kind of is just a little bit more of a different approach. Minimum volatility. That's what I want to leave you with for this fund. It's more minimum volatility. Okay. So this is something that is not going to be, your fund that's going to, produce 45% returns. It's not. But this is one that you could look at maybe putting some money in that just kind of gives you, it's a little bit more, frankly, probably way more conservative, less risk in it, things like that, and it has minimum volatility. This is this is the reason this one definitely made the top 10. Okay, The next one is iShares Core High Dividend ETF. Okay, this one has high dividends, and again, it's an ETF. A twist on low risk investing that offers a little bit more risk, but also the potential for bigger rewards is to focus on high yield dividend stocks. So this particular ETF focuses on bringing you bringing you high yield dividend stocks. Okay, so these companies offer proven stability through regular dividend payments. Obviously, you know what dividend stocks are. And so this particular fund is made up of high yield dividend stocks. Okay. So it helps ensure that you are getting, a payday through those dividends, as well as being involved in the ETF, things like that. So specifically, this particular fund yields a 4% annual payout on your investment right now. That's the dividend. That compares with less than 2% yield on other ones. So this has a pretty high dividend yield. So it's something, if you really, really like dividends, you might consider this particular ETF, the iShares Core High Dividend ETF. All right, let's move on. Another one that's pretty good here is if you're maybe wanting to look at maybe some international, maybe having an ETF that has a little bit of an international flavor. That is the Vanguard FTSE All World ex-US ETF. Again, say that really, really quickly. The Vanguard FTSE All World ex-US ETF. Okay, so all of the prior funds we've been talking about right now have been all basically funds built around companies that are based in the US. Okay, so but hey, there's a ton of other companies out there that are publicly traded that are outside of the US. Okay, so if you're a bit skittish about, say, domestic stocks and you want to get some international stocks, then this could be, again, the fund for you. Okay, it's an all-world fund that includes every single geography, but it is also ex-US. Hence the name in the fund. It is ex-US. So there are no US companies rather in this fund. Okay, so it's international. Okay, doesn't mean you get a bunch of tiny and unknown businesses. It has Alibaba is in this one, and like Swiss pharmaceutical company Novartis are in this particular fund. Excuse me, as well. Okay, so this is a good one if you're looking for. Maybe you want in your portfolio, you want some particular, you want an ETF that's made up of companies outside of the US. Okay, perfectly cool. That's why I made the list of top 10. All right. The next one I want to talk about is the Vanguard FTSE Emerging Markets ETF. Okay, this one's really interesting. Okay, so this one is a little bit, if you're looking to be a little bit more adventurous, maybe you're looking to have a little bit more risk in your overall portfolio, you might put some money in this ETF. Okay, so if you're looking to be more adventurous, this could be for you. This comes from Vanguard, and it's basically an international fund. Okay, and it cuts out the larger companies in Europe, Australia, and Japan, and it focuses on emerging markets such as China, India, Brazil, Russia, and Mexico. Okay, these markets come with a bit more risk, obviously, right? Particularly when it comes to virus-related economic impacts. So, okay, and frankly, right now might be a good time to buy into this fund because, we are eventually going to come out of COVID-19, and this could be something for you. So the companies that make up this fund have brighter long-term growth potential thanks to consumer and technology trends. Top holdings include a Taiwan semiconductor manufacturing companies, a Chinese e-commerce company, JD.com. And if you really want to look abroad for investing opportunities, this could be the fund. It has more than 5,000 emerging market stocks in just this one particular fund. 5,000 stocks are in this fund. So if, again, you're looking for more of a little bit more of interest, looking for a bit more of a flair, this might be the fund for you. Okay. All right. So this particular fund, the Spider Gold Shares Fund, this is one if you're looking to maybe, put some money in different types of assets instead of stocks and bonds. Obviously, maybe looking for gold might be something for you. And kind of given what's going on with the political and public health uncertainty around in 2020, 2021, and maybe a little bit into 22, the stock market could be a little bit less attractive to you as an individual investor. So you might be looking at something like gold. This fund is specifically built around gold. Okay, and let me give you some stats. Gold GLD, this particular fund, is up 25% in the last 12 months. It did obviously beat the S&P 500, which we know the last 12 months has done about 13.6% in return. So there's clearly profit potential in diversifying outside of the stock market. That's why this particular fund, this ETF, made it into this list of top 10, is just to look at maybe some different types of funds you might want to be involved in. Okay. And by the way, that was number 10. Okay, so number 10 was the Spider Gold shares. I hope you've enjoyed this video. Real simply, I made this video for you because I found some great information doing some research for you, and I thought that this was a video you'd love to see, looking at the top 10 best ETFs that are out there right now to buy in 2021, looking into 2022. I absolutely recommend, if you're going to get involved in ETFs or pick up some of these guys, these particular funds, then look at doing it for the long term. ETF funds are definitely built for the long term, and something you should definitely be considering doing kind of long term, 2, 5, 10 plus years out. And they're really good for that reason. So I hope you've enjoyed the video, and please consider subscribing, and please drop me a like on this video. It greatly helps my channel out. I would greatly appreciate that. I hope you enjoyed it, and I'll see you in the next video. Until then, take care. God bless. See ya in the next video.